And so the crazy day in crypto continues. We've got Bitcoin down 2.5%, going back down to test 30K. We've got Fantom, a big red day, down 33%, as all coins across the board have pretty much been decimated by this contagion effect. And again, if you haven't watched my video explaining that from earlier, go watch that. We've still got Luna down $2.24. We've got the peg sitting at 68 cents. Again, go watch that video from earlier today to watch the Luna video. Those were the two videos I posted earlier on before going for a walk, as I advised you guys after my rant. So I went for that nice walk in rainy London, and now back on my desk with a bit more of a calmer mind to analyze some of the key levels in the Bitcoin and Fantom charts. Because do we have further downside risk, or is now a good time to be buying this so-called dip? The markets have been decimated. We're going to find those key levels for you right now. If you like my perspective, consider hitting the like button and subscribing. This video is brought to you by OKX, one of the fastest and lowest trading fee exchanges on the market. Go check out OKX. Links in the description to trade over 200 plus cryptos you can pay using your credit card or any other payment method. Definitely go check out OKX. Links in the description. Now, as you can see here on Bitcoin, we're down 2.5%, and we ran as low on the day to 29,123. This is low, and remember, this gets back down to our weekly kind of worrying level. If I just remind you of that, if I show you this here on our weekly chart, this is the big macro, call it if you want, if you like, pattern, and clearly we broke the trend to the downside, so this trend is nullified. But then the worrying thing from here is, do we go and create the lower low? And remember, the low from this point exactly now, we never thought we'd have to look at it exactly, the low from this candle on this week dating back to June 2021 was 28,695. The low we've just hit so far is $29,012. Okay, so we're a couple of $100 away from posting that lower low. So it's a very precarious moment in the crypto space, and if we do post that lower low, then you can definitely argue from a technical perspective and from a fear perspective, you could be heading lower to the downside. Now, you saw some support come in exactly at the yellow line we had drawn, which is 29,000 mark. Okay, so the support came in and the dip started to get bought, and we can see that if we head back over into the charts to kind of look at the 5-minute chart again, this is where that dip was bought. Now, we know the bad CPI miss, it wasn't super bad, but the CPI miss helped contribute to this, to the downside. Remember, we had the year-on-year headline figure coming in at 8.3, which is a little bit of a slowdown compared to previous months, but it is still higher than the expectation of 8.1% on the CPI. So that contributed to some of this, but then the markets quickly rallied back up before now slowly giving it back up and coming back towards the 30,000 mark. So crazy volatility in this market. We've also got the dollar index holding up pretty strongly. Remember, crypto moves to the inverse of this, and we've seen the dollar index has been on a pretty impressive run. It's broke for its previous price ceiling. You can see it got rejected by the 2 points, which I'm illustrating here, but it's broken through that point. It continues to show strength, which is not great for crypto. Okay, let's take a look at the Fantom chart, because Fantom is now sitting at 35 cents right now at the time of recording this video, and again, it just blasted straight through. As Bitcoin was going down and equities markets were falling today, we fell straight down, straight through the 38 resistance, didn't even stop there for a second, and I think we got a lowest candle there, if you were lucky to pick that up on a limit order, of 27 cents. But that didn't last long, and it quickly then ran all the way back up to 42 cents and now back down to 35 cents, right? Good luck keeping up with this market. By the time I render and upload these videos, they completely change, because the markets are just on one right now, and it's a crazy market and very difficult to time this market. So that brings us on to the question, is this peak fear? Because to all intents and purposes, it feels like it, right? We've been getting decimated for 4 months straight now. You can see the US equity markets again down today. Let's give that a little bit of a refresh just to make sure we've got the latest numbers here for you. It's down, the Dow Jones down 0.4, 0.77 on the S&P, and down 2% on NASDAQ, which are your high growth stocks. And that's the important one for us, because Bitcoin is most correlated to the NASDAQ, and that explains why we're down 2.5%. If even your blue chip equities in the NASDAQ are down 2%, 2.5-ish% here on Bitcoin, isn't too crazy, is it? Now, what's causing some of these altcoins to move massively? If you've not watched my video from earlier, there's a whole bunch of reasons around this contagion effect. But one pattern you are for sure seeing is any coin with algorithmically backed stable coin, they are getting hit right now. And even if they're not algorithmically backed, even if it's a fiat backed or a crypto backed stable coin, you're seeing big falls today in those. So, coins like Near Protocol, things like Tron, things like Fantom, because they have FUSD, they're really falling badly today, as obviously that's the contagion effect from people saying, hang on, if Luna, a top 10 crypto with one of the arguably supposed to be the best algorithmically backed stable coin, could fall like that, then what can happen to some of these other coins? So this is a natural contagion effect. This happens in equity markets all the time. We saw it in the financial crisis when we saw Lehman Brothers go down. We saw other banks get hit with the same pressure on their share price. And these now sometimes can start to become opportunities to buy the dip, because whenever the market wants to paint a broad brush, right? They want to paint everybody with the same brush. That's an opportunity for you to go, hang on, I've got a conviction to say, this is why we're different from Luna. This is why the project I'm invested in wouldn't have made the same mistake as Luna. And therefore you can add some upside there and build some conviction there. Now, the other thing, just to zoom out, just to make sure we're absolutely crystal clear on this, I was having a call with our course member lives as well, and we always focus on portfolio allocations. Now, when the market is running up, that's a really boring thing to do, right? It's a really boring thing to say, no, guys, keep 40 to 50% of your portfolio in Bitcoin, when everybody's talking about ape coin. They're talking about even meme coins are running at that point, right? I sound really lousy when I say, hey, you got to keep that allocation, right? Don't forget to hold some Bitcoin, which is barely moving 1 or 2%. And everybody wants that Luna, which is pumping 10, 15%. Everybody wants a Fantom, or they want an Avalanche, or they want some Solana, which is going on a big move, right? But you've got to have the anchor in your portfolio. Anchors are boring, but they're extremely useful, particularly when a storm comes. And that is why we need to keep the one true, most battle-tested cryptocurrency, Bitcoin, as a huge part of our portfolio. It's not for the good times. You're supposed to be annoyed by the amount of Bitcoin in your wallet during a bull market, because you're going to wish you had more altcoins, because that's how it works. Altcoins move at a multiple. But in times like this, what is the one green thing we're seeing today? I'll let you look for it. Here, Bitcoin dominance up 3%. Why? Because Bitcoin is outperforming altcoins in this difficult market. There's the proof today. When everything hits the fan, Bitcoin holds up better than other altcoins. It's not rocket science, right? You need that anchor in times of stormy conditions. And that is why you've got to do that. You've got to have that in your mindset, because it's boring, but you've got to do it. And I just did that today. I mean, coming back onto the point, I nibbled a little bit of Fantom today at about $35. But to remind myself of what needs to happen, I forced myself to go nibble some Bitcoin as well to balance out the portfolio. And it's that kind of psychology, that kind of training that's really going to get you through these markets. Not greed and putting every last bit of penny you have now into Luna, hoping and praying it's going to get back to normal. Because the Luna you've got now is not the same project. The Fantom you're invested in today at 35 cents is the same as the Fantom you're invested in 60 cents, right? Nothing's changed. Nothing's come out that's fundamentally different. They've not been hacked. They've not had a rug pull attempt. They've not had the situation that Luna's had in terms of a depeg of an algorithmically backed stable coin damaging the network. So it's the same coin. Therefore, you can hold your conviction and you can dollar cost average in, as long as the portfolio allocation is right in your portfolio. But for something like Luna, I can't justify it. Outside of a speculative play, if somebody wants to speculate, some just money which they don't care about, fine, go ahead, gamble, speculate, do that. That makes you happy. But as long as you don't think this is an investment, that you're buying Luna now, hoping, because that's the word, it's not an investment, hoping it's going to go back to its glory days, and maybe it will. But the point is, Luna is not the same project today as it was 4 days ago. Fundamental flaws have been uncovered, and therefore it's not the same project, so you can't have the same conviction. Right? So the Luna you were holding back then, including me, because I hold some Luna, the Luna you were holding back then when it was going as high as $119 is very different. Your conviction levels should be very different to the Luna you're holding today at $2. There's no point trying to conflate the two. They're two very different things, and therefore you have to make a fresh investment decision with the fresh data now available to you. Right, hope that's clear. Now, in terms of Fantom, are we at the bottom? The scariest thing is, no. Arguably, we could be seeing much more downside. I mean, the inflation is still there. Yes, it managed to curb a little bit, which is a good sign for the markets. We know we've had a 0.5% interest rate hike as well. So hopefully by the next reading, that starts to have an effect, and we can see inflation start to inflect downwards. Because remember, we did get this slight inflection down, but we want to see it more. The markets wanted more, okay, which is a good sign. The market wants to be strict with it, saying, look, You've increased interest rates. Let's see actually have an impact. We want it to come down. But this is a good sign that it's come down. At least it's not flat, and it's definitely, thankfully it's not steepening up even more. So it's showing that what the Fed has started to do, because remember, it was just a 0.25% increase, the first one, and there's always a lag before it actually takes effect. So it's good that it's cooling down. And I think the next one will have an even better effect, which is good sign overall. So now the question is, when will the market realize and when will it start to rally? And that's the key. But the market doesn't seem to be in the mood for that today. The market is still, if we head on over to the S&P, let's take a look here at the S&P in my green list. There we go. And you can see we're still about 1% down here. We're still about 1% on the S&P today. But like I said, it's the NASDAQ almost down 2% today, which is taking the brunt. So, there's no room right now, even in the stock market, for any kind of risky plays. People are just going to companies with profit, with good balance sheets. That's just the market we're in. We're in a very difficult market. And it's the same for crypto. People are rotating into Bitcoin. That's why you're seeing the Bitcoin dominance go up and you're seeing altcoins getting smashed. Getting absolutely smashed. But it's not a bad time to dollar cost average in. You can do a nibble, but I would not be going in heavy. And definitely do not be disobeying your portfolio allocations. Keep everything within the right percentage portfolio allocations. And if you look at everybody, if you look at all the people coming out who are upset, big crypto influencers, big crypto influencers, whether it's from Ran at Crypto Banter, whether it's Carl the Moon, whether it's all these crypto influencers who've lost a lot of money on Bitcoin, it's because, and I'm not saying all the names I've said there have this, but some of those had huge allocations to certain projects, and they were open about it. And that's the key. The ones who will continue to survive will be the ones who keep the small slice of pizza for every little project, and they don't let it become half their pizza, 3/4 of their pizza, all of their pizza, because when the market goes down, and any project, I've said it weeks and weeks and weeks, any project can go down, including Bitcoin, right? Any project can go down, and it's our job to make sure we're diversified. So any single perturbation doesn't affect us, right? Any single one of those getting damaged doesn't affect our full mood, doesn't stop us from, doesn't make us, doesn't get us wrecked, doesn't get us out of the market. And that's the key. We've got to maintain that. We've got to stick through it. It's a difficult time, but if you're new in the market and you're going through this and you're learning all of these steps, you could be entering the market at a really good time. The ones feeling it the most are obviously the ones who entered in right at the top of the market. That's number one. The ones who are feeling it next are, people who are obviously heavily invested in, heavily allocated to a certain project. If somebody's heavily allocated to Fantom, it doesn't matter when they entered. If they entered above 34 cents, they're going to be in pain, right? Then same for Luna, same for all these projects. People are hugely allocated to those portfolios. They're going to be hurt. But the only ones with a diversified portfolio who are affected, who are hurting right now, are those that build their portfolio at the top. But if you're new to crypto and you're entering now, you've got a great time to build your portfolio. If you follow the right portfolio allocations and you've learned the psychology and you start building those positions out now, you're getting some crazy low prices on crypto. But one thing's for sure, we have to see, does Bitcoin hold this 29,000 level? If we fall below that 28,000 mark, then we could be really heading into a dangerous pattern to the downside, and we're going to have to reevaluate some price targets to the downside, because finally I might start being ready to talk about some of those lower price points around low 20,000s and 20,000. Some people were talking about that really prematurely, but I wanted to see, do we break that critical lower low on the around 28,000 mark, which I just showed with you. As always, guys, if you like my perspective, don't forget to check out the course member live streams, ijaz.uk/member. We have 3 times weekly live streams where you can jump on a live stream with us. We can discuss your portfolio. We can critique it. We can do tokenomics. I can talk about the state of the market and a whole lot more. So ijaz.uk/member. Don't forget to hit up the like button and subscribe, and go and watch the video, which I'm going to link up here, which is the full in-depth 1.5 hour long interview with the CEO of Fantom, Michael Kong. It's in times like this that we have to zoom out and go back to the fundamentals, listening to the founders, listening to the project team, understanding what new upgrades there are going to be and what that means for the ecosystem. This is how long-term you build conviction. So go watch that, leave me a comment over there, and I'll see you in the next one.